also think about ETH. Once the Shanghai fork happens,
Yeah.
we basically get a liquid money market curve out to 12 months. So now you have a financialized instrument of which to build more DeFi and more stuff on. It becomes very interesting. Now, if I'm right and liquidity comes into the system, then ETH has a real problem, which is a shortage of supply, because everything's staked and it keeps burning the more activity there is. So it becomes ultra squeezy. And I think we will see some kind of upside dislocations during a bull market because of it. It wouldn't even surprise me if they don't change the burning mechanism at the end of this, because it might create some real problems down the track. If anybody, God forbid, if anybody gets a huge application on top of ETH that gets the next 300 million people on, just no supply of ETH. You kind of look forward to weak prices because you can buy more because of what I talked about. But the problem is the people who want to get rich quick. And they're the people who get wrecked. They're the people who get angry. They're the people, because their time horizon. This was the great piece of advice Paul Tudor Jones gave me, which is the best traders in the world's time horizon of their investment matches their idea horizon. A lot of people say, oh, there's going to be I think the Fed are going to cut rates 100 basis points next year and they trade a 1 week trade. It's like, you're not trading your view. You're trading a 1 week time horizon view. And so with crypto, you just need to ask yourself, what is my view? How long does this play out? If you say, well, it's going to play out over 10 years, well, then you shouldn't change your bet over 10 years, except add to it, unless something fundamentally changes. And fundamental changes are not price changes. It's difficult because you've got to step back and look at the trend of the asset. If the trend of the asset is endlessly up over time with volatile swings, then you can't have a bearish mindset because it's like an option. It expires. Being bearish expires in crypto when you hit the uptrend, because sooner or later it keeps moving unless something fundamentally changes, which is different to other trading often. It's just less neutrally cyclical than, let's say, commodity trading, which tends to be just up and down. So, I think people really struggle. Like a lot of macro people struggle with the fact that equities go up. They hate it because there is a huge narrative. The most powerful narrative I've seen for a very long time is the sticky, higher for longer. Inflation is ingrained in the system and we're not going back, and this is a different world. So I put a log chart of 2-year yields, 10-year yields, right? And it's just one-way trend. And we saw this massive spike down in yields and an equal and opposite spike up, the pandemic. But the trend probably still going lower. And we look at it the same with CPI. And I look at this now and I'm thinking, have the bears got themselves in the same mess that the bulls did when it was the other way around? And actually the trend hasn't changed at all. And we often have to step outside of our own narrative to ask ourselves the hard question is, has everything actually changed or not? And I don't see the evidence that it does. No evidence from all the decades in Japan, plus Europe, plus the US, that QE does anything. It doesn't leak into the system. So here's another conundrum that nobody mentions. It's like, well, obviously, it goes to the banks and they lend out to hedge funds. It goes into the equity market. Look at the volumes of the equity market. Doesn't happen. The volumes do not correspond to that narrative. What's actually happening, as you guys have seen in emerging markets, is when you debase a currency, the markets just adjust the price. Right? Most people don't understand how the Venezuelan stock market goes vertical, or the Iranian stock market, or a whole bunch of these things. They're based on the debasement of currency. People get confused about hyperinflation, which is a consumer, there is a point where it tips, but if not, it does not affect prices because you and I don't get more money because the Fed is printing it. We just don't. And what do? Go and tap on the Barclays door and say, well, they're printing money. Can I have some too, please? Let's fuck off. So I think the trends are reestablished and all we had was a correction. So I think the trend rate of growth keeps falling. It's currently at the US about 1.75%. if we were to check it in 3 years' time, it's probably 1.5%. I think the trend rate of inflation, whether it keeps falling or stabilizes, don't know. I think that the central bank balance sheet, by the end of this business cycle, so let's call it by the end of 2024, it's 8.5 trillion now. It's probably 12 to 14 trillion by the time we finish it. It's a function of demographics. It's a function of the issue of commercial real estate in the banking system. It's the issue of the banking system itself, and it's the issue of just funding the debt from 3.5 years ago that we talked about before, the interest payments. I think that technology will vastly outperform regular equities, and that we're the start of a technological renaissance, which I call the exponential age, which is a nexus of all of these technologies, including crypto, all interweaving together. And if people haven't paid attention, it's like, it drives me insane when people are like, well, technology, these shares are not going to go up for another 10 years. You know, it happened in the 90s, right? In the 2000s. I'm like, if you throw something like AI into the equation, it's like a nuclear bomb for disinflation and innovation. There is zero chance people are not going to pay up for this. Zero. I mean, Microsoft, I reckon, will double or triple in value just on the back of this alone. And it's already a gigantic $2 trillion company or something. It's crazy what is happening. So I also think that we will see the structural issues of long-term knowledge worker unemployment, much like we saw with steel workers, car workers, and everything else. I think a lot of people are going to be laid off in this cycle that won't get a job again, and they'll be forced to be entrepreneurs, you know, or consulting or whatever, you know.
Oh, right.
I think it's the rise of the artisan. So, you know, you saw, it really struck me when we were all together in Paris. London's doing this as well. Geneva did it. It went really ultra high market boutique-y. You know, it's like some guy who only makes bread that's taken from Mount Ararat and carried down by virgins and camels, and they, you know, and he'll charge $700 for a loaf of bread, and it must be had at every meal table in Chelsea. You know, it's like that shit goes on, and I think we'll do more of that. But a lot of people say, hey, these jobs, humans are very good, they replace the jobs. No, what we've done with the Industrial Revolution was take physical labor and allow humans to be knowledge workers and service workers. Service work is going to get wildly destroyed by this. I mean, we're already seeing robots taking over all of the jobs in warehouses. Deliveries are going to be by AI and robots. I mean, that's the end of every Uber driver, every truck driver, every taxi driver, anything like that. Driving tests, driving schools, all gone in one go. All the people at the driving license center that have to give out driving licenses, they all go as well. I mean, it's ridiculous. So there's nothing to replace the knowledge worker except the expert or the artisan. I can't see it any other way. So my view on this is there are two ways of helping a lot of people here. One is universal basic income, which is you're going to have to tax the AI and the robot somehow, which is better capturing a corporation tax probably because they don't pay enough. And secondly, I think it's universal basic equity, which is Yatsui's thought process, which is if you participate in Web3, you're participating in the value of the network or the community you're in. And by being a community member, a social person, things that humans excel at, we can reap rewards which have equity-like value to us. So it's going to be a crazy, you know, say 3 years. 3 years normally isn't that big a change. If you think of the 3 years between 2016 and 19, nothing really happened. The 3 years from 2019 to now was monstrous. And now going forwards, it's going to keep accelerating. Yeah, and people are missing the point here. Crypto started this. It was the fastest adoption of any technology the world's ever seen. It is not stopping. Then you throw AI on top. It went even faster. 0 to 100 million people, 5 weeks. Never been seen in history. Microsoft are about to put it into Office. Could go to 1 billion people. Then, at the same time, AI is going to change genetic sciences, and we're going to be curing cancers. That is going to go exponential. When AI embeds into Internet of Things, that goes exponential. Robotics is going exponential. It's all going exponential. So it's not going to be an either or. It's going to be this ridiculous phase where just literally everything about us is changing. Our longevity of life changes. Our productivity changes. What we do for a living changes. The value that we capture within economic activity, everything changes. That's what we're about to go through. And we are going through. Whenever you think your shit smells of roses, you're going to get your face rubbed in it.